What's happening, everybody? Welcome to another edition of This Week in Crypto. Great way to kick off April here. We've seen plenty of major assets reaching psychological milestones, notably Ethereum crossing over 2,000, Chainlink crossing over 30, Bitcoin on the verge again of potentially crossing 60,000. It's been teasing around the 59 to 59.8 range for the last day or two here. And it's always worth noting that we aren't in the business of making investment advice of any kind, but our metrics are showing some interesting things to have us sort of calculate the likelihood of surpassing 60,000 and going beyond. And we'll jump into that with a few different metrics that we'll show off. For starters, as always, we're showing our screener here. You'll notice I don't have the usual chart up, and that's because we have a few outliers that are sort of skewing our data right now. And I thought it would be easier to just show off the tree map for this round and keep this segment short so we can get right into the meat and potatoes of some of the top caps and how Bitcoin, Ethereum, Chainlink, and a few others are looking. As we can see, Bitcoin has gone up 12.5% over the last week. Ethereum up at about 22.9%. Polkadot around 20%, Litecoin 14%, and Chainlink, as I mentioned, 15.5%. Plenty of other notables. Filecoin almost doubled. Plenty of other smaller assets that we won't get into right now. But as always, make sure that you're dropping plenty of comments in our YouTube channel if you'd like us to take a look at some key metrics for some of your favorite assets. We'll always leave plenty of time for that. All right, that being said, we're going to kick things off by talking a little bit about how the sentiment looks right now, especially on Twitter. We focus on Twitter, as most of you know, because of the fact that this was the way our algorithm was designed to really focus on what's considered to be the largest platform out there and have the most predictive power when it comes to how they feel at any given time about Bitcoin, Ethereum, etc. So in short, we feel that using Bitcoin's weighted social sentiment on Twitter is a fairly accurate reflection of how the crowd at large is feeling about it at any given time. As we can see right now, if we go all the way to the right here, we've got a weighted social sentiment of almost -1. This means that the standard deviation, or the way we calculate it, the sentiment balance times the unique social volume, the standard deviation is at about -1 compared to its usual mean. This is a very, very large negative number. And you can see historically on the graph, it rarely reaches this mark. The last time it got this low was very early October when it actually did get to -1, and we're currently at about -0.97. So just about there. And for those who remember early October, it was a very, very good time to enter cryptocurrency. Bitcoin was at 10.6K at the time. And it essentially 6x'd since then. So that being said, the difference between then and now is that we're seeing a very, very high climb. We're coming off of a couple weeks where we've gone, maybe 10 days or so, where we've gone from 52,000 to 60,000, essentially, almost. And generally, you don't see negative sentiment when that happens, but due to some of the psychological factors that comes with reaching a milestone once again, and a lot of people looking back at the last time we hit 60,000 right here, and then quickly seeing a big drop off, there's a lot of skepticism, and the crowd generally believes that history is going to repeat itself. And that, at least in my eyes, and I'd like to hear Dino's perspective as well, that seems to be the case as to why we're seeing so much doubt and uncertainty when it comes to actually hitting 60,000 and zooming right past it this time around.
Yeah, thanks, Brian. Well, first of all, need to pat ourselves on the back and say that we called it last week. So during the call last week, we set up a price prediction for Bitcoin on SANR that Bitcoin was going to rise, and I'll share my screen a little bit later and show you that we're currently 10.85% up on our initial prediction. So far, so good. I think the reason why this current rally might feel a bit different to the one on March 14 and March 15th is precisely because the social sentiment is quite low. This indicates that, well, number one, we're also seeing a relatively low social volume compared to the previous spike above 60K for Bitcoin, which does seem to suggest that the crowd is sort of becoming fairly used to these levels as far as the total amount of chatter about it, and is becoming slightly disenchanted by Bitcoins ranging in the 60 between 55 and 60K marks, right? That's pretty bullish. Now, I'm not going to, however, beat around the bush. There are several sort of counterpoles to Bitcoin's current 60K push, which I think are going to be fairly difficult to overcome. The biggest one, Brian, if you want to share the derivatives chart, the funding rate, currently we're going to be looking on for Bitcoin's derivatives rate or funding rate on BitMEX. However, the same sort of pattern seems to be showing up on all of the centralized exchanges, all of centralized exchanges, which is that the funding rate has started to grow once again, and it started to grow with a kick, with a passion. We're already at our highest level, or we have been earlier this morning at our highest level since March 14th, basically since the previous 60K push, suggesting that there's a lot of over leveraged longs, and that's usually a recipe for a long squeeze. I'm not sure this is what we are going to see. However, you are clearly able to sort of discern the cluster of funding rate spikes that have happened over the last 24 to 48 hours. After a period of decline in the average funding rate for Bitcoin in particular, but also a variety of other coins as well, we are now starting to see once again the derivatives or the futures market being very bullish on the top coin. Usually, or at least in the past, this has suggested that a short-term correction might be in play. So this is one of the things that I am worried about when we're talking about Bitcoin's ability to sustain another 60K push. I would be surprised, and it seems like Bitcoin is already kind of correcting a little bit. I think we've dropped maybe 3 or 4% over the last 2 hours. So it seems like this is already becoming a little bit of a self-fulfilling prophecy. So in my eyes, I would not be surprised that we see a slight correction so that the funding rate normalizes before we see another leg up. That being said, social volume is low, suggesting that at least as far as the crowd is concerned, this is fairly this is not yet, anything close to peak hype that we are used to seeing at tops. And also a number of other like on-chain metrics aren't that bad for Bitcoin. We can cover a few of them as we go, like MVRV in particular leaves a lot of room open for Bitcoin's price to appreciate up to some 65K range, I think, before we can really consider it being overvalued. The biggest for me counterpole for Bitcoin's push above 60K, at least the sustained push above 60K, is currently the funding rate. Just historically speaking, and obviously past performance isn't always indicative of future results, but historically speaking, throughout this rally, these levels of bullish bias as far as derivatives market is concerned has usually been a thorn in Bitcoin's side. So unfortunately, we see it once again. We'll have to just wait and see if Bitcoin bulls are going to overcome it.
Mm-hmm. Thanks, Dino. Yeah, I look back to mid-December, right, when we first started to see, the 0.10 to 0.12% range as a regular occurrence on the BitMEX perpetual contract funding rate metric. And oftentimes it can last for like a full-on month, right? So having something up here peaking at about 0.11% as of yesterday doesn't necessarily mean we won't see a sustained climb and maybe even get up to these really high 0.15 to 0.2% levels. And that would be a pretty solid indication of a top, because whenever it gets up there, we have historically seen, even going back much further behind October 20, a large correction occur once you get up to those levels. But we're not there yet, right? We're in a overly longed range at the moment, but it doesn't necessarily mean we're at the level of absolute greed. And one thing I would be confident about is if and when we do get over 60,000 again, which could happen as soon as later today with as close as we are, that that perpetual funding rate going to 0.15% and above may very well come to fruition, because that is a huge psychological support level that a lot of people are waiting on. And part of the reason that we aren't in positive range, if we go back here to Bitcoin, is because there's a lot of doubt and a lot of waiting and passivity to see if we're actually going to cross that barrier once again. If we do, I expect us to get more positive here and for the perpetual contract funding rate to go up.
Sure. Actually, if you look at the funding rate for Ethereum, I think it paints a very interesting picture. You are right, and I agree that we haven't really reached the levels that we've seen in January and February. However, I am relatively skeptical that we are going to reach them. So I think Ethereum's funding rate chart does a pretty good job at showing it. By the way, are you sharing the screen, Brian? Because it seems like...
Yeah.
Okay, here we go. Yeah. For a second there, it was offline. Anyway, so what you see here is that the funding rate for Ethereum, first of all, it's spiking once again. Currently, it's at about a month high. As expected, Ethereum just broke a very important psychological milestone. However, what you see, at least what I think you see on this chart, is that there was a very, very bullish sentiment towards Ethereum at the beginning of the rally in early January. So this is, I think, where people thought, all right, DeFi is becoming bigger and bigger. Ethereum 2.0 has overshot the amount of Ethereum needed for the beacon chain to go live. NFTs are starting to become very popular. This is the time for Ethereum to break up. And Ethereum has struggled for, in comparison to coins like Bitcoin, and even Litecoin and XRP at some points in the rally, Ethereum has kind of struggled in relative price performance. And so the next time that you saw Ethereum sort of spike in terms of its funding rate around the previous high on February 20th and 21st, the funding rate was already relatively low. So I think, and we've seen another sort of flattening of the funding rate throughout March. So to me, what this is saying is that in general, it seems like the market has become fairly again, disenchanted with Ethereum and as a viable asset in the short term. This might obviously change given the fact that we've just broken 2K. But at the same time, I do believe that the funding rate might just flatten out over time as people realize that, the gains that you have seen in the first 2 or 3 months of this rally aren't necessarily going to be as sustainable moving forward, right? And this is why I think the sort of normalization of funding rate is going to be possible. And as a result of that, even relatively low levels of funding rate might suggest concern or cause for concern. I could be wrong, especially given the fact that Ethereum has just broken 2K. I think it's a very strong, like I've already seen a bunch of super, like the first thing that I saw, the first tweet that I saw when I opened my Twitter timeline was Ethereum at 2K, the road to 10K continues. So it's definitely a sort of a bull fiesta at the moment. So I would not be surprised to see the funding rate climb even higher, and the higher it gets, the more sort of appetite there is for shorts and Bitcoin and Ethereum bears to kind of crash the market for a little while to wreck all the over leveraged longs and pocket some profits for themselves. So it's going to be a push pull type of environment for a while there, I think.
Mm-hmm. Yeah, as we can see, this is the first time that Ethereum's reached this milestone in about 5 weeks, a little over 5 weeks, 5 weeks and a few days. And the last time we saw it, many people doubted that it could stay, and those who doubted it were actually rewarded, because we ended up dropping all the way down to I think a little below 1300 if I were to zoom in and make that chart line here a little more granular. But with a revisit, I think it's more realistic for people to start looking for higher numbers and really expect that this is just one small drop in the bucket compared to, like Dino said, a larger road to 10,000 and beyond, right? So for that reason, I think that there's going to be more optimism now that we've actually reached that 2,000 milestone once again, which is going to make less of a shocking impact on the second go around compared to the first, when it ended up going to an all-time high of, I believe, 2045-ish or so. And we're going to have to see. I think Dino mentioned that the perpetual contract funding rate is relatively lower compared to where it was in early January when it was just, sky high at 0.6%. And even though it's sitting at 0.25% right now compared to Bitcoin's 0.11%, it's worth noting that the resting state, right, the average point that Ethereum's funding rate on BitMEX tends to just sit at is much higher than Bitcoin. And it kind of segues me into wanting to show our BitMEX funding rate model, which many of you over the past couple of weeks who follow our Discord may have seen. And what this, let me actually use this chart. It's a little easier to see. We'll go with this one. And I am going to switch our spikes to just 10. And that should instantly switch it. Okay, much better. So Bitcoin's candles are here in blue. The high ones are the top 10 highest 8-hour spikes over the last 3 months. And there are an equal amount of bottom 10 blue ones that are the lowest times that the BitMEX funding rate for Bitcoin was over the last 3 months in 8-hour intervals. You'll notice very clearly when there are these high spikes, you'll see local tops here in the respective blue chart line here almost every time, and vice versa for low candles. Look at how in late January, we had these very low funding rates as people were shorting, expecting that this small dip would continue, and the opposite occurred, and we started to really climb up until, we got to here, this one on February 9th, which signaled a local top, and then we started climbing again. And we actually kept climbing despite these for just a few extra days until we eventually got so high with Bitcoin that it corrected in mid to late February. And then it started to get neutral. That's why you don't see these top 10 or bottom 10 spikes. Now, switching over to Ethereum, a similar pattern can occur. Ethereum here is in red. These large spikes indicated the local top, and actually they were still longing on its way up. So this was a bit of an outlier here, but at least this first one signaled the local top. And then we started to see these bunches of shorting of very low funding rates, indicating a high degree of shorting. And especially right around here, you see these 3 reds. That's when the price started to spike. A few more reds over here. It stayed a little bit neutral until eventually climbing up, and it's been neutral most of the way ever since, even though it looks really high, going back to it, wherever it went. Where did it go? Here it is. Yeah, so the Ethereum funding rate may show at 0.25%, but like I said, relatively speaking, what this model does well and is available to all of our Sandbase Pro members is reveal the percent change compared to its norm. So all of these 6 assets, Bitcoin, Ethereum, Ripple, Litecoin, Chainlink, and Bitcoin Cash, they're all on the same chart, and they're using the same percent change axis to give them kind of a equal platform to show which ones are really spiking and dropping despite their various degrees of different funding rates. So interesting stuff there. We've got a few other topics to really cover here, and I want to make sure we get to them all. But if you have more questions about funding rate, drop them in the chat, drop them in our Discord afterwards, and we'll be happy to address them more. Moving over to daily active addresses, really briefly, I want to show that the long-term pattern for Bitcoin still looks good here, and this sort of lends to the prediction we had last week about us being able to rise further despite the serious doubts going on, right? We've been seeing a long-term growth in terms of utility, in terms of the amount of unique addresses that are actually exchanging crypto, Bitcoin specifically, on a daily basis. And that's why we've seen the price rise essentially. Now, it isn't rising, quite rapidly the way it was from October all the way up until early January, but it, at the very least, is showing a mild growth here over the past month to month and a half, right? Going back to the 15th when we were sitting at about 991,000 active addresses, we spiked just 2 days ago at 1.25 million. So that's a nice little 25 to 30% bump. And, it's staying in pretty tight proximity here. We're not seeing a ton of outliers right now, which is generally a good sign. It's showing consistency. So that's good on the Bitcoin side. To go over to the Ethereum side, you'll notice there are two different bars going on here. We have the daily active addresses, again shown in orange here, where you can clearly see a large, sharp rise, much more noticeable than on the Bitcoin end. And we had, I don't know how far back, but this was yesterday, 585,000. I want to circle back because it's probably important to find the last time it got to this number. It was the highest in at least the last year. If we go back to 2019, it's about, I guess it doesn't get very, it's a little bit zoomed out, which is why you see this. But if we were to actually look day by day, we'd probably find that this is actually the largest daily active address performance in over 2 years. I would want to confirm that, and you'll probably see a tweet about whether or not that's true later today. But zooming back in, we can also see daily active deposits, and these are basically measuring the amount of active movement moving specifically into deposit addresses that we are aware of. And there's a very clear inverse pattern compared to what we see on the daily active address side. Daily active addresses have clearly been rising over the last 6 months, while deposits have declined quite rapidly. So the ratio between active addresses and daily active deposits has gone much more in favor of the, by default, the non-deposit addresses. And that's generally a good sign. We don't want to see, if you're in a long position, you don't want to see many active deposits occurring for an asset, because that means there's an increased likelihood of the asset seeing a major sell-off, because the point of moving funds to an exchange is to ultimately dispose of funds in a lot of cases. Not always, but in general, if we're basing guesstimates on history, that's generally what happens when you see a large amount of deposits. Right now, the opposite is occurring, and we're falling. So it's a very encouraging sign. And I undoubtedly would say that the growing ratio of active addresses compared to deposits has contributed to Ethereum's ability to revisit 2000.
Yeah, it's weird. Ethereum is just weird at the moment. If you look at exchange inflow for Ethereum, so obviously over the past maybe 3 to 4 days, there has been a slight uptick in the amount of addresses moving Ethereum to centralized exchanges, meaning the amount of deposit addresses, but it's only been like a couple of thousands. It wasn't super high. And also the amount of Ethereum being moved to exchanges overall, it hasn't really, or at least yet, it hasn't really picked up much. There isn't that much sell-side pressure at the moment. In fact, there was more Ethereum being moved to exchanges around the 24th March, the latest bottom for Ethereum, suggesting, short-term holder capitulation and all of that. Compared to what we're seeing right now, it doesn't seem like the 2K breach has really gotten the bears, Ethereum bears, out of their hibernation. It seems like for the time being, there's not a whole lot of sell-offs, which once again could be, a calm before the storm. But overall, it seems like they are fairly confident in the price performance of Ethereum moving forward. Also, if you look at something like age consumed, which is the amount of, or the amount of previously dormant Ethereum moving on the blockchain, you'll also see that there hasn't really been any considerable uptick in the past 48 hours. The biggest uptick that we've seen in Ethereum is age consumed was once again around this previous bottom, suggesting that long-term holders were also looking to kind of, move away from Ethereum for the time being. I think you can just, you can type in age consumed and it should show up, Brian.
There it goes. It wasn't working before.
Yeah. So yeah, this is what you'll see if you zoom in on the last maybe 3 months or something. It's very low. It's very low. There's not a whole lot of activity as far as old Ethereum coins. Now, compare that to Bitcoin, and Bitcoin's age consumed at the moment. We are seeing a rise over the last couple of days, the biggest since basically March 12th, right before that last push and the imminent correction, suggesting that at least on the side of Bitcoin, some long-term holders seem to be moving their coins, right? They seem to be changing their tune for the time being and kind of reacting to the latest 60K push. As a rule of thumb, I mean, we mention this every now and again, H consumed isn't really a top or a bottom indicator. Usually what it does is it suggests that a period of incoming price volatility may be likely. So the reason why this is so is because H consumed kind of the premise is that long-term Bitcoin, Ethereum, or any long-term holders don't really move their coins without proper or just a general sort of market knowledge, veteran market knowledge, and also without sometimes intimate market knowledge. So in general sense, long-term or the major shifts in the behavior of long-term holders tend to have a profound impact on the that particular coin and the particular coin's market action. And that's why, for example, you have seen massive spikes in Bitcoin's H consumed. Like the biggest spike in Bitcoin H consumed before this one was right around the bottom on March 25th, I think, right? Yeah, right there. So once again, suggesting that, okay, for the time being, it seems like, a change in trends might be possible. It's the same thing that you saw on February 7th, I want to say. Right there, yeah. So sometimes these spikes tend to indicate a turn of the tides for the coin in question. So similar to Bitcoin's funding rate, the fact that we are seeing a big spike in H consumed over the last 24 hours might be a bit concerning. Now, usually I don't really like to give too much weight to these solitary spikes in H consumed because it can just be, it can mean whatever. Just if you see a one individual isolated spike in H consumed, it doesn't necessarily mean that there's like a wholesale exodus of long-term holders, right? So usually what I really look for are these sort of clusters of spikes, like you saw there, exactly. So yeah, keep an eye on H consume for Bitcoin at the moment. It seems like it's on the rise. If we see a sort of sustained spike in H consumed over the next 24 hours as Bitcoin continues to try to break the 60K mark once again, it might suggest that long-term holders are changing their tune for the time being, and a short-term downtrend may be in the cards.
Yeah, it's worth noting that we do have an age-consumed sand sheets model that works similarly to what we're looking at now, which is the exchange inflow and outflow model. They're all designed. All of these charts here are designed to quickly identify which assets out there are seeing the biggest inflows and outflows beyond just Bitcoin and Ethereum, so you can quickly just get a gauge of which metrics are seeing huge outliers, just like the one we can see here for Celsius, which I'll very briefly go over in just a moment. But I want to remind everyone that as long as you have a Sandbase Pro account, you can go to add-ons, Sand Sheets, enter your API key, and you're all set. All you do is download the default template by going File, Make a Copy. You get your own instantly, plug in your API, and you see everything that we're seeing, and it updates in real time here. So really useful to have something like this. You can also see outflows here, where there was also a big one for Celsius. You can see which ones are seeing a huge percent change on the outflow or inflow side. They're marked as either red or green, depending on whether it's bearish or bullish for inflow or outflow, respectively. And lots of good information there. You can see Ethereum here, for example. Inflow is at about normal, at just barely 9% above the mean, which is not much. Bitcoin here is actually negative 13% inflow, meaning it's getting less exchange inflow than average, which is a slightly good sign. So something to keep in mind there. As I mentioned, Celsius, just to quickly go over one altcoin before touching
Brian,
on.
Before you do,
yeah,
let's just repeat or remind people that they can let us know in chat right now what coins they would like us to take a look at after this sort of presentation or part of the presentation is done. So we want to hear what you guys are currently looking out for, as everything seems to be pumping, especially the top caps. Are you interested in those? Are you interested in some sort of, additional analysis for Bitcoin and Ethereum? Or do you have, specific mid to low caps that you would like us to look into from a on-chain and social data perspective, right? What is your current portfolio tracker, looking like, and what sort of coins are you interested in? Let us know in chat, and we'll get to at least a few of them in the next 30 minutes.
Yes, please. Thanks for the reminder, Dino. We definitely are looking forward to showing off a few assets here, just like we're going to do with Celsius here really quick. And the reason I'm bringing up Celsius is exactly from the last Sandsheets model that we just explored, showing that there was a massive inflow. It's confirmed here on Sandbase, where we can see this massive, massive inflow of funds. Dino and I were speculating a little bit on why this might be occurring. But as far as you've seen, Dino, you haven't seen any news stories indicating why this would be occurring, right?
I was looking for it before the call. There doesn't seem to be like the biggest news as far as Celsius is concerned that has anything to do with exchanges is that it has been listed on Bitfinex, but that was 2 weeks ago, man. So there's some type of activity, elevated activity as far as the amount of sell being moved to exchanges. Let me know if you have any specific reasons why. One thing that we can do, we don't want to do it now because it would take too much time, but Brian, you can show people how they can kind of do their own research as far as figuring out what is going on. So if you go to top transactions table, you can search for it there. You can see the biggest transactions for Celsius within any specific time frame. So just select the last, let's say last 24 hours. So between, March 31st and April 2nd there. And what we're going to be left with are the biggest transactions over that time frame. So we have this particular transactions of 20 million Celsius being moved to a particular address, and then we've got the next one is probably the one that's one of the biggest culprits for this rise. Is it's 10 million Celsius being moved to a wallet that we have labeled as a centralized exchange. So if you go to the transaction hash of that second transaction, Brian, just click on the hash there. Let's see what that transaction actually is. Okay, so it seems like somebody's moving a lot of Celsius to FTX. Okay, could be Alameda, for example. I don't know. I mean, obviously, we would have to really do some in-depth analysis.
It's from FTX, just to correct. It's
it's also from. Yeah, it seems like maybe then, it's from N2 because the recipient is also the FTX. Okay, so this then wouldn't be the reason why.
There was a duplicate one right below it here. So there were two occurrences that occurred at just about the same time. So this one might be worth exploring as well. And this one, it's difficult to identify what kind of address this was here, but the two is also unidentified. So it's really tricky to figure out exactly what this was.
Yeah, we would need to go transaction, but there we go. We would need to go transaction by transaction and then also look into specific addresses, what their historical balance is. You can also see how the money flows through this address if you scroll down a bit. There's a feature that we've recently added. So select any address. And then scroll down and you can show the money flow infographic for that particular coin. And then if you add maybe 3 levels of depth, both inbound and outbound, you will actually be able to see, okay, where did, and then change the currency, because at the moment we're looking at Ether transfers, or on the left, change it to Celsius. Once it loads. So what you'll be able to see is where, or the addresses where the Celsius has come from to this address, and then the addresses that this particular address has interacted with once it has received Celsius, where it has basically sent Celsius toward. So it's these types of analysis that we do when we really want to dig deep into a specific coin and figure out, all right, what exactly is happening. I think it might be stuck at the moment.
Yeah, it might be doing a little too much loading for now, but
there you go.
You can see down here the latest transactions, and it clearly shows every single one of its transactions going back as far as you want, basically. So this is going over the time range we selected at the beginning. You can see exactly when it sent off Celsius, when it accumulated more. It's really fascinating stuff. I think it's amazing that we can do this. And we're just going to be refining this kind of feature more and more over time. All right, last thing I want to show before we start getting into questions is the token circulation, right? We have this NVT analysis model, which automatically basically measures how unique tokens are being moved within a given network over time compared to its market cap at that time. And really over time, you'll see things fluctuating between bearish here in red, green here in bullish, everything in between. You'll notice that March actually gave us our first bearish signal for Bitcoin in about 6 months or so, 7 months. And despite that, you know, we did hit an all-time high, but it was kind of a plateau, right? And now we're kind of in that transition phase where we're not sure whether it's going to keep going up or down. Well, obviously, we made some arguments for each case, but right now, you know, just through 1 day of April, we're in neutral range right now, reflecting in yellow. You'll notice it's doing a refresh, so it might disappear. But long story short, Bitcoin was not actually getting enough token circulation compared to its market cap during the full duration of March. And it's something to keep in mind. Obviously, with sentiment being negative, that's a bullish occurrence. But on the actual on-chain side, looking at daily active addresses making, you know, keeping stable and making a modest rise in the last couple of months is good. But the token circulation and the amount of actual unique tokens moving from address to address is not looking so good right now, and it's something to keep in mind, just to you know, keep us grounded and know that there's going to be some risk if token circulation stays in this neutral to bearish range like it's looking like right now. We'll see if it refreshes really quick here so I can show Ethereum as well. It's coming back. Here we go. So Ethereum has very clearly shown nothing but bullishness since May of last year. We're in a semi-bullish territory, or were for the whole month of March. So this is a completed bar now, and it showed semi-bullish, which was actually the first time we saw something not just super bullish here in bright green since May. But that being said, we're still, according to this model, seeing enough token circulation to continue seeing the price rise. So based on this model alone, Ethereum looks to be in a better position based on token circulation than Bitcoin. Obviously not an investment advice, but it's a great model to keep in mind. I think Link might even be working right now. Yeah, Link, I mean, as you can see, has been in a bullish territory for a long time here. So you can actually select and add any asset you want into this model with your Sandbase Pro API and get some really, really useful information out of it. That being said, I'll transition it over to you now, Dino, if you want to start sharing your screen.
Sure.
And I can start reading some questions once we get there. So we have a queue of different assets we can look at.
Sure. I've seen a few requests for Chainlink. I've seen one for Ren. I actually want to look into Ren myself. I haven't checked out that coin for at least a month. Curious what's been going on with it. I've been too busy with just other coins. There's too much going on at the market. Can you see my screen, by the way? Just to be sure.
Yep, all looks good.
I'm still not seeing it on the stream, so I'm just gonna wait a few seconds. All right, it's showing up now. Good. All right, Chainlink, right? We crossed the $30 threshold. Similar to Ethereum, a very strong psychological resistance level. Let's look at the general overview of where Chainlink is at the moment according to its on-chain data. So we can start with just the basics, starting with the active addresses overall to see whether Chainlink's overall on-chain activity is in a downtrend or an uptrend. As you can see, generally, obviously this was an outlier, but overall, since the February price rally, the amount of addresses interacting with Chainlink have kind of been in a state of decline. So we're currently looking at the previous or the rolling 24-hour addresses interacting with, meaning sending or receiving Chainlink on a daily basis. So the higher the amount of activity on the network, by proxy you can say there's more demand for the coin, and in general over time you can say that there's growing adoption for the coin, and then vice versa. If the amount of activity on the network declines, it might suggest that people are moving away from that coin and into other assets, or it could be just that they are hodling for the time being. Now, overall, the trend has been down. There's been about 50% decline. Let's take 16 or 14K, 16K here, all the way down to 7.5K here. So about a 55% decline in the amount of addresses interacting with Chainlink daily over the last 30 days. However, there has been a slight uptrend over the last 72 hours, coinciding with its rally. In general, I think that's a good sign. I think that overall, even though this decline is slightly concerning, Chainlink remains one of the most utilized coins on the Ethereum mainnet. Like, if you believe that a coin, if you believe in a coin's sort of mid to long-term potential, or that's how you kind of evaluate the coin, I think Chainlink's on-chain activity should give you a lot of optimism, just given the fact that it is by no means, it is probably the furthest from a dead coin that you can find on the Ethereum blockchain. The fact that it currently has over 8,000 active addresses interacting with it daily puts it in the top 5 coins on the Ethereum blockchain. Like, we can check that very quickly. Let me show you how you can do that. Let's say I create a new screener here, say DAA for daily active addresses. So on the screener, you can select a variety of our metrics and filter out coins based on them, right? So here I'll take all of I want to look at all of the coins on the Ethereum blockchain. So that leaves about 1,200 coins in our database. And then I also want to look at all of the Ethereum-based coins that have had more than, let's say, 7,000, even 5,000. More than 5,000 daily active addresses over the last week. This is on average. So that leaves 6 coins, guys, 6 coins. And that's Ethereum, stablecoin, 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 wrapped Ethereum, Chainlink. So overall, I mean, as far as Chainlink's overall demand, it has been in a downtrend for a while, for about a month, but I believe that it's still a very solid sort of, it still shows very solid fundamentals, right? Now, as far as general sort of sell-side pressure for Chainlink, given this push, we're still not seeing a whole lot of worrying signs. Similar to Ethereum, there has been a slight uptick in the amount of activity or the amount of addresses moving Chainlink to exchanges, presumably to sell, right? And that's why sometimes you will see these spikes in daily deposits like here, as well as here around local tops for Chainlink, because it suggests a network-wide effort to sell off your bags for the time being, reduce your exposure, mitigate risk into the rally. For the time being, this is slightly concerning, but obviously we're nowhere near, previous sort of levels of sell-side pressure for Chainlink. If we look at the amount of Chainlink being moved to exchanges, so the chart that I showed a minute ago showed the amount of addresses moving Chainlink to exchanges. This chart shows the amount of total amount of Chainlink being moved to exchanges. And as you can see, currently we're still not seeing any significant uptick. For the time being, it seems like people that are holding Chainlink are not content with selling at the $30 mark overall. So for the time being, it seems like Chainlink Army is holding strong. Diamond hands or whatever they say on Wall Street Bets. As far as a few other metrics that I want to look into, if we look at the network profit loss for Chainlink, we can also see there's not a whole, even if I zoom in here, we can see that relatively speaking, there's not a whole lot of profit taking place on the Chainlink network. So zooming out, especially here, you can see these massive spikes around several of Chainlink sort of price upticks and price drops. At the moment, there's really not a whole lot. There's a slight uptick in its network profit loss, but relative to historical data, it's not all that concerning. So some profit taking may be in place, as you can see currently. When you really zoom in, you can see spikes around local tops, and that's to be expected. But overall, I think that's healthy. At least a little bit of uptick in sell side pressure is more than needed. It suggests that the market is not overvalued. It suggests that people are in fact scared for their bags rather than being irrationally confident about the coin's short-term potential. So overall, I think Chainlink's metrics. I mean, obviously, none of this is financial advice, and anything can turn on a dime, and Chainlink could dump 15% in the next day, and none of us would be more the wiser. But overall, currently, I'm not seeing super concerning, visibly concerning signs in Chainlink's on-chain data. If we look at Chainlink's 30-day MVRV ratio, which is trying to calculate the average profit or the average loss of all link holders or all addresses that have acquired Chainlink in the previous 30 days, what we can see is that currently the 30-day MVRV ratio for Chainlink is at about 5.8%. That means that on average, all of the addresses that have acquired Chainlink in the previous 30 days are at about plus 5% in profit. So this is ways away from what we've seen in terms of Chainlink MVRV peaks during Chainlink's January and February rally. And as a rule of thumb, the way that people use this metric is the higher that the MVRV is, the more unclaimed profits there are, and therefore the more likely it is that people are going to start claiming some of those profits and selling off, taking getting out of the market for the time being, applying sell side pressure on the coin, right? At the moment, if we look at the last year of data, we see that Chainlink's definitely seen higher highs as far as MVRV is concerned. We've kind of waited in this sort of plus 0 to plus 5% territory for about a month, but overall I think there's 30-day MVRV definitely leaves enough room for additional price appreciation. I wouldn't call this super overvalued according to this metric. I wouldn't call Chainlink's current price levels super overvalued according to MVRV. If you look at the 365-day MVRV, which tracks the average profit of all of the addresses that have acquired Chainlink in the previous 365 days, they're currently at about plus 60%. So there's definitely money on the table that can be taken and can be spent, right? Long-term Chainlink holders are definitely still in profit, and they can exit the market if they're becoming a bit too worried about it. But once again, if you look at historical trends, there's definitely room to grow before we hit the proverbial danger zone historically, where long-term Chainlink holders have been known to really start taking their profits, and we see risks of sort of short-term price correction in order for the MVRV ratio to normalize. So these are some of the things that I'm seeing. If we look at Chainlink whales, let's see right here. You can also see, I was looking at it a bit while I was investigating Chainlink recently. I mean, you can also kind of see some fairly strong or optimistic patterns. Let's look at the last 3 months, and let's start with these two groups in particular. I think these are fairly interesting groups to observe, right? So this is the amount, the addresses holding 100,000 to 1 million Chainlink, right? In terms of what we're seeing here is the total amount of Chainlink that they're holding. This is in percentage of total supply of Chainlink, or we can look at the actual amount that they're currently holding. That's about 65 million Chainlink, right? So one of the things that you can kind of notice on this chart is that this particular group of holders seems to be showing that they have some impact on the market. Like if we look at the last 3 months of data, we can see several drop-offs around local top. So the decline in their collective balance here before a local top, clearly a decline in their total balance around the February rally, especially at this point in time before we had I think a 10% correction. We had a drop off here as well as another big drop off here, both before short-term corrections. And then finally, we had another sort of short-term drop off in the last, this week, right before the uptrend began. At the moment, the amount of Chainlink being found in these addresses has not yet seen a massive decline. In fact, it has grown slightly. I think this is about, so from 65.3 to 66. Okay, it's about 700,000 Chainlink, give or take, in the past 48 hours. If you see another sort of drop off, especially in this category in days to come, historically, they seem to have indicate whale exodus for the time being, whale profit taking in the short term, and might tank the price of Chainlink at least for a while, right? Now, on the other hand, if we look at the 1 million to 10 million coin range, or addresses holding between 1 million to 10 million, you can see similar patterns, right? They have also offloaded here around the local top, or around the February price top. And since March 24th, which was the bottom, not just for Chainlink, but for Ethereum as well, they have kind of been accumulating. Now, I will say that, looking at this and this category of holders, there seems to be some type of inverse correlation. So I would take this with a grain of salt, especially also the fact that 1 million and 10 and above, addresses holding 1 million link and above, are likely not going to be just private addresses or quote unquote whales. There are going to be some exchange wallets in there as well. So you need to keep that in mind when looking at these mega large holders. The accumulation or the increase of their collective holdings doesn't necessarily mean that whales are accumulating. It could also indicate that more money is being moved to exchange wallets, which is a completely different trend, and it would actually be fairly concerning. So this is why I like to look at these sort of mid-level guys. 100,000 Chainlink is definitely not a small amount, right? So we're still talking about Chainlink millionaires, and the fact that for the time being they're not showing signs of fear, I think is fairly good, fairly optimistic for the coin. Even this one, I think, is probably at least to some extent filled with individual addresses rather than exchange wallets, because this is what, 30 million and above dollars worth of Chainlink. They're also showing signs of accumulation over the last week into the rally. So for me, if I were to look for specific sort of exit patterns for Chainlink, things that I would look for are declines in these two groups. So 100K and 1 million, 1 million and 10 million in particular. I would also look for strong spikes in MVRV. So basically, if I see massive upticks in the 30-day and 365-day MVRV, maybe rising to these levels, or especially when we get to here, I would consider this to be overvalued. And also I would look for spikes in daily deposits and exchange inflow. Daily deposits, like I said, several times in the past, we have seen them coincide with periods of short-term correction and local consolidation. That's why, while this is still fairly within normal range, if it continues to grow over the next couple of days, it is going to suggest that a lot of money is being pumped into exchanges, that a lot of people are trying to take profits, and therefore, it's going to be increasingly difficult for Chainlink bulls to absorb this sell-side pressure, because they would need to be okay with absorbing it at a relative premium, right? The 30 bucks is quite a lot for Chainlink historically, so you just need to ask yourself whether there's going to be a lot of buy-side pressure at these levels for Chainlink, right? So overall, I think currently, like I said, Chainlink's on-chain data isn't showing signs of massive red flags. The decline in active addresses is relatively concerning, but Chainlink is still one of the most used coins on the Ethereum blockchain. So if you're looking for sort of mid to long term analysis, I think it's looking fairly okay. Fairly okay for the time being. Okay. So I also saw Ren, right? So let's take a look at Ren. Ren is a coin that I used to like quite a lot. It's just been sort of, oh, one sec. Somebody's calling me. Sorry about that. Ren has been the coin that I like to look quite a lot at previously. It's just been off my radar for the last couple of months. So let's look at where we are now. So let's start with the general sort of activity on the network. I would assume, yeah, I was going to say, I would assume that there was a massive spike around local tops. This is probably triggered by the deposits or the rise in deposit addresses rather than any sort of, inflated utility of the networks. It's probably mostly these spikes in the activity on the network are probably mostly triggered by more addresses moving Ren to exchanges rather than anything else. So at the moment, first of all, Ren seems to have normalized at about 1,000 addresses per day interacting with the coin. Totally fine, I think. this was never going to be sustainable. For about 5,000 addresses interacting with Ren on a daily basis. Like I said, there's only 5 coins that are currently having more than 5K addresses on a daily basis, sending or receiving that coin. And 4 of those are, or actually 3 of those are stable coins, and the 4th one is Chainlink. So, you know, it would be in a very sort of select society if it was able to sustain these types of levels. And I would be much more bullish on it if it was. But obviously, this was just because of the price uptick. It seems to have found sort of its normal or fair network activity at around 1,000 daily active addresses, which is still pretty good. I mean, in general, it does seem to suggest that, you know, there's a lot of people or addresses being actually interested in Ren over time, both for speculative purposes and general utility, right? The fact that there's around 1K addresses interacting with it puts it in, I would say, about top 20 Ethereum-based coins, which is not bad, you know. Now, as far as the sell-side pressure for Chainlink, let's look at what's been going on. For Ren, similar to Chainlink, we see spikes in deposit around a lot of local price corrections here, 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 and here. Pretty much every spike or every local top for Ren has kind of been coinciding with massive spikes in daily deposits. Makes perfect sense, right? So at the moment, we're really not seeing sort of any signs of elevated sell-side pressure. If anything, the sell-side pressure has been sort of exhausted for the time being. If we look at exchange inflow, pretty much the same thing. So there's a lot of people taking profits at these levels. For the past 2 weeks, there hasn't really been a lot of sort of additional sell-side pressure. Generally, I think this is good, at least in the short term, right? To not see massive spikes in daily deposits and exchange inflow as the coin rallies. Right, it's a different story when the coin is declining. I actually think that can be a fairly good sign to see spikes in exchange inflow and daily deposits because it suggests a lot of, you know, overselling, oversold conditions, and in the short term, it can actually suggest that there's a potential for price bounce back. But when you're rallying, when the coin is pumping, you don't really want to see massive spikes, significant spikes in sell side pressure. It's just you know, basic math, right? For the time being, I'm not seeing anything particularly concerning as far as Chainlink sell side pressure. If anything, it's fairly low, surprisingly low given its last week of data. As far as last week of price data, I mean. As far as age consumed or sort of long-term holders, rent holders moving their coins on the blockchain, we're not seeing. Well, like if I zoom out of these spikes, I'm going to see a little bit of an uptick. Yeah, like right here. But relatively speaking, it's fairly low. We can look at dormant circulation as well. So let's say, okay, how many Ren coins that have been dormant for at least a year have been moved in the last, last 3 months. So we can see a lot of very dormant coins have moved here, here, and here. But since then, it's been relatively low. And if we zoom out of these massive spikes, there's been an uptick on March 31st around the local bottom, suggesting maybe, short-term holder capitulation. But overall, I mean, it's not, like I said, looking at it historically, it's really not a big deal. All right, let's look at network profit loss. Oh, okay, this might be a bit concerning. So there's a spike in network profit loss today, suggesting that people are starting to take profits. Now, you need to understand how this metric is calculated, right? Because it's not always going to be super accurate, especially for coins that have more than one purpose and that aren't purely speculative in nature, like Ren really isn't. So the way the network realized profit works is that you take the way the metric works is that for each coin or unit of the coin that moves on the blockchain, we take the price at which it was last moved. Let's say these Ren that were moved today, let's say that they were acquired here, right? So we take the price at which they were last acquired, they were last moved on the blockchain, and we assume that this was its buy price. It was the price at which it was purchased. And then the next time that these Ren coins move on the blockchain, for example, today, we take the price at which it was next moved on the blockchain, and we assume that this is its sell price, right? That they were sold at this junction in time. So the difference between those two becomes network realized profit and loss. So that's why when you see spikes in a network profit or loss, I'll just call it NPL for short. When you see spikes in NPL, it suggests that on average, all of the coins that are being moved on the blockchain at that specific point in time are being moved at significant profit. And when you see dips in network profit loss, like you see here and here, for example, and here around the local bottom, it suggests that on average, all REN coins that are being moved on the blockchain at this particular point in time are being moved at a relative or significant loss, right? So the fact that currently we are seeing a spike in REN's NPL suggests that that the coins that are being moved in the past 24 hours are being moved at significant profit, and it might suggest that there's some amount of profit-taking activity taking place. However, we haven't really seen yet an uptick in exchange inflow. So for the time being, at least as far as the REN's exchange data is concerned, we're not seeing any signs of elevated profit taking. However, I would be a little bit concerned because you can definitely see that there have been similar upticks in network profit loss around local tops for REN, especially during this rally here, right? Keep it with a grain of salt. Like I said, because this metric assumes that all transactions are buys and sells, it works better for coins like Bitcoin than for coins like Ethereum. So this move that we are seeing today, it's not necessarily coins being moved to exchanges, right? It could just be coins moving from address A to address B. And if there's a massive sort of discrepancy between the price at which these coins were acquired and the price at which these coins are currently moving, it's going to show up as a spike in network profit loss, right? Still, that being said, a little bit of caution, I think, is advised here. Let's look at the MVRV for REN. So, okay, currently we're looking at the 30-day MVRV. Once again, the average profit of all addresses that have acquired REN in the last 30 days, previous 30 days, it's very low. It's 4%. So basically, swing traders or short-term REN holders are just about plus 4% on their initial investment on average. The question that you need to ask yourself is whether short-term REN holders are likely to be selling their bags at this point in time. Like if you are plus 4% on a coin, are you going to, sell everything, or are you going to actually, kind of chill for a bit, especially when the market is pumping, in order to, allow the price to appreciate and allow your profit margins to grow, right? So like I said, in general, the larger or the higher the MVRV ratio, the more likely it is that we're going to see short-term, sell-offs and risk of short-term correction. These are the levels at which we usually see REN peak, so upwards of 50 to 60%. We also see like several local tops around 25%, which I think can also be fairly concerning. Currently, Chainlink is sorry, I keep saying Chainlink. REN's MVRV is looking fine. Especially like if you purchased it here, you can actually see that the 30-day MVRV has kind of already bottomed out or has reached the historical bottom. So this seems like it was a pretty interesting time to accumulate REN according to its 30-day MVRV ratio, because it has kind of reached these local bottom levels, right? The sort of local opportunity zones. At the moment, I think there's still room to grow for REN. There's still room to grow for a lot of these coins, just because March has kind of been whatever. A lot of coins have been suffering. A lot of short-term holders, people that have acquired in February, have kind of been in pain over the last month. That's why the MVRV ratio for a lot of these coins, including Chainlink, Ethereum, and REN, is relatively low. Let's look at the 365-day MVRV ratio as well. So this is the average profit of all addresses that have acquired REN in the previous 365 days. So these are long-term holders, right? So on average, about plus 70% currently for REN's long-term holders, which is quite high. But again, I don't think it's in the danger zone. I wouldn't put it in the danger zone just yet, at least according to the current rally, or the rally that we have seen since the beginning of the year. These are the levels at which we have seen REN's long-term MVRV peak. It seems like long-term REN holders are content with holding up to upwards of plus 130%, plus 100 to 130% in profit before they start selling off and claiming those profits. All right, did I want to see something else? Let's look at the REN social volume just to see where we are. Okay, It seems like a little bit of an uptick today, but nothing. Actually, it wasn't today. It was 3 days ago, so we're fine. Nothing too out of the ordinary. As a rule of thumb, the higher the social volume, especially when you see it during a price rally, it usually suggests that people are starting to become hyper aware of the rally, and starting to FOMO into the coin, and that's usually the first signals of crowd mania and overvalued conditions. So I would, for rent holders, I would hope to see social volume also start to decline further in the coming days. But overall, similar to Chainlink, really, I'm not seeing currently any sort of massive concerning signs for REN. I haven't really seen it for Ethereum either. There are a few sort of concerning signs for Bitcoin, and Bitcoin is Bitcoin. If we want to look at one coin that's going to have massive sway over the market, it is BTC. And currently, if the funding rate and age consumed and a few other concerning metrics that we've seen for Bitcoin realize themselves, it might just tank everything down. But individually, for all of these coins that were looked at today, I wouldn't be super surprised to see another leg up as the March progresses. As the April progresses. So that's sort of the short term look at a few of these coins. Okay, I think we're gonna have to call it here, Brian. It's already 5 minutes past 5. I do want to show our SANR platform once again before we end. So like I said last time, for those of you that are not familiar with SANR, SANR is a decentralized marketplace for price prediction signals. So it's a project that we've been working on, and it's still in beta. What you can do and what you can currently do on the platform is you can choose from a list of about 30 different coins, and you can set your own predictions about whether you believe that from this point on this coin is going to rise or fall in price, right, in value. You can set up certain advanced parameters like target price and stop loss, and you can compete with other people on the leaderboards, with me and other Santiment team members and early adopters. And in general, you can kind of, because every prediction that you set gets recorded on the blockchain, it becomes immutable proof of your market sense, right? So it's sort of like your blockchain trading journal. And these are the 3 forecasts that I currently have active. This is the one that I set last week on the stream, that Bitcoins was going to rise, and it's currently up 11%. These are a few that I've also made during the week. I thought KNC was slightly, or actually this was I think 2 weeks ago, and this was last week, where we were looking at KNC and I thought that it was slightly overvalued. So it seems like I'm slightly up on that prediction. I'm also about break even on my 0x. So I'm not gonna, I'm also only going to demonstrate how it works. So if you say, okay, Bitcoin is currently 59, if we think that the funding rate is relatively high, we can say, okay, I think that from this point on, Bitcoin might correct for a little bit before we see another leg up, right? So you can just click open forecast here, and forecast has been opened successfully. If you go to all of my forecasts, you can see that currently this is where we are. And you can also see here the overview of when I set up each of these signals, so that you can kind of see, where was I close to the top, close to the bottom, where was my performance overall. So currently I'm at about 12%, but most of these are just demonstrations rather than me really playing the market. So I suggest, if you guys sort of like to see what the Santiment team and community members think about the market, how profitable they are, check out sanr.santiment.net, and also just create your own signals. So let's play against each other, see at the end of each week who gets the best of who. So I think, Brian, that's gonna do it for my end. Anything you want to add before we close it for today?
It's probably worth mentioning that we have a voting system now for assets that people want to have us analyze more. So if we want to quickly go over how that works, that might be beneficial as well.
Okay. Give me 1 sec. Yeah, I was just answering in chat. The sanr.santiment.net is the link. Oh, it did not get logged. 1 sec. So this is the link to the platform, guys. Okay, so Oh, okay. That's why it did not get recorded. So Gary, if you want to share a link to SANR, just so people can access it. So Brian, you wanted to showcase the voting capabilities. Is that what you said?
Correct. Yeah, if we can.
On Snapshot, right?
Yeah.
So I think let's do it next week because I'm not exactly sure how we want to proceed with it. Because basically, guys, what we wanted to do is we wanted to create a way for you to vote on the coins that you want us to analyze each week, right? And one of the ideas that we had was to have a snapshot, have our governance platform. So snapshot.santiment.eth right here. Where you can vote on various sort of proposals on the Santiment platform. You know, if you want us to add certain coins, if you want us to add certain metrics, this is where you can do so. Now, we were thinking about somehow integrating this governance part of our platform to voting mechanisms where you can vote on coins that you would like us to cover each week. I'm still trying to figure out exactly the best way to do it, right? Somewhere where you can kind of, instead of every one of you creating separate proposals and people voting on it, maybe some way that we can collect a few coins ahead of time and then people can vote on them specifically. I think we can work out the kinks for next week and then present it there, Brian.
Yeah, sounds like a plan. So
Okay.
looking forward to talking about it more next week when we have a little more clarity on it. But I want to thank everyone who was able to join us today on a holiday, and we wish you all a great weekend. And keep us posted in Discord if you have more questions and need more clarity on anything we've discussed.
Sounds good. Thank you guys for sticking around. I know it's a holiday for a lot of people. Happy April Pump. I hope that we see a rerun of February for the next couple of weeks. Like I said, keep an eye on a few metrics, in particular Bitcoin's funding rate, MVRV, and whale behavior in the next couple of days. I think those are going to be maybe early indicators of what's to come. If you want to keep talking to us, just join our Discord. We're going to be there after the call. And otherwise, talk to you in 7 days.
Take care, guys.